Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 22nd of November. Starting off with the FTSE, which is currently as dead as a dodo, just getting resistance there around 75.10, which is the 50-day moving average. We're hoping that we'll stay within this mini range, 7400 to 75.10 over the near term, and then head higher towards the top of that falling trend channel from February at 76.60. On the downside, if we do break 7400, then it's back down to that uptrend line there from back in March at 7,300, but really not much to say at the moment. I suppose the negative there is the way that the 200-day line is falling, but that doesn't necessarily mean it would drag the market lower. Moving along to the DAX, and here obviously a better picture than the FTSE. We've had the bear trap island reversal for October and early November. Rising 50 and 200-day moving averages, that suggests that we're in the run-up to a golden cross, and the run-up to golden crosses will tend to be the strongest part in the cycle, and that's proved to be the case now. Above the 200-day moving average, 15,600, we're still looking for this market to retest the best levels of the year towards 16,500 by the end of next month. Dow also looking quite pretty of late with the bear trap that we had at the end of last month, bullish divergence as well, so that worked very well indeed. The hint now is that we're finding support at and above 35,000, which was the old August-September resistance area. If we can hold that area, then it looks like we could head up to as high as 36,100 by the end of this year at the top of that one-year rising trend channel. Moving along to Bitcoin, which has managed to survive the shenanigans at Binance. Here we had one bull flag consolidation area at the turn of the month, and it looks like we've got a second one here between 35,000 and 38,000. Still waiting for an end-of-day close through 38,000 to give us a 43,000 or even 44,000 target by the end of this month. Obviously, we're running out of time on that call, but obviously this market can move fast when it wants to. On to the commodities, and starting off with gold, just on the basis that we're at $2,000 an ounce, which is obviously wonderful. 50 and 200-day moving averages both rising. End-of-day close through 2,000 going to be significant if we get it today. The target here up 2058, which is the top of that broadening triangle from May. And we're looking for that 2060 area while we're above the latest support for this market around $1,967. Ideally, there's no break back below those rising 50 and 200-day lines. Moving along to the situation at crude oil, where there's been a bear trap in place below $75. That was the initial November support. Above 75, we're looking for at least $80, which was recent resistance, and probably logically back up to the 50-day moving average at $84 over the next 2 to 4 weeks. On to pound dollar, which is in focus at the moment, given the hopeful tax giveaway that we'll have from Jeremy Hunt later today. We've got rising 50 and 200-day moving averages. Above that 200-day line at 124.40, we're looking for up to 127.30 at the top of that post-September triangle. On the downside, hopefully nothing worse than recent support around 123.70. Moving on to the stocks, starting off with Capex, and here you can see that the shares have given us a V-shaped bull flag resting on the 50-day moving average at 1.25 pence. Above that, looking for up to 2.6 pence or 2.7 pence at the top of that triangle in place since back in March. At this stage, only well below the breakout level from last Friday. I think it was 1.1 pence, really delaying the upside scenario for this market. On to another stock which is looking quite exciting at the moment, Future Metals. Here we've had a breakout towards the 200-day moving average. I suspect we haven't been above the 200-day line for a long time, and in fact it was April last year, so that is a significant change. And the view now is that while we're above recent November resistance at 2.3 pence, looking for 3.2 pence initially, which is the top of that broadening triangle from May, and then as a best case scenario target, maybe by the end of next month up to 4.6 pence, and the top of that post-March triangle on this daily chart. Moving along to Helium 1, where it's, I suppose it's a case of damage limitation. The situation here was just thought I'd look at the the setup that we have at the moment. So falling trend channel there from back in July. The old support around 4 pence, and the floor of that channel there heading down towards the 2 pence area. So maybe that will be the floor over the near term, and then the shares can rally back to 4 pence. It would be quite a result if we just found support where we are now, because it's not really a level that we've had in the recent past. Ilika is next, and here you can see that we're just approaching our initial target here around 52 pence. An end of day close through 52 pence, or weekly close, could give us a fresh target there up to as high as 75 pence by the end of next month, which is the top of a broadening triangle from the beginning of this year. But ideally we stay above the 200-day line, currently at 41 pence. The stock which I've covered quite a lot recently, but I don't think anybody else really looks at, is Intercede. The reason for covering it again is that we've had an unfilled gap to the upside. We've hit our target there. I think that was the second target we had at 75 pence. Above 75 pence, we can now upgrade the situation again and look to as high as a February resistance line projection, currently pointing to an 86 pence target. And we're looking for that over the next 2 to 4 weeks. Ideally, we stay above the initial November resistance at 66 pence in the meantime. On to Kefi, which actually for once in the recent past actually has a decent technical signal. It is called the bear trap gap reversal. So we made a temporary new low there a week or so ago, and then we've gapped up through the 50-day moving average at 0.62, above 0.62, looking for initially up to 0.75, which is a June resistance line, and then maybe up to as high as 0.9. And by the end of next month, which is the upper parallel of the other June resistance line there. But the key here is staying above the top of the gap at 0.62 over the near term. Moving along to Phoenix, which we've been on the case both fundamentally and on the technicals as well. I think the initial breakthrough here was through the 50-day moving average. We had the sideways shuffle, and we've had a breakout as well through the 200-day moving average at 25 pence. Our target was then up to 35, which we're just shy of at the moment. Above 35 pence, looking for up to 49 or 50 pence by the end of next month, if everything goes well. On to Premier African, which so far has delivered a bear trap rebound. Still trying to find support there in the upper 20s, but as long as we're above that June support there at 0.23, we're expecting some kind of recovery, maybe up to the upper 30s rather, which was resistance on the way down earlier this month. Quadrise has done well, a bit of a surprise mover here, but we had our initial target there after breaking that resistance line there around 0.8. The target was up to 1.5, which seemed rather ambitious at the time. Above 1.5 now, looking for up to 1.95, which is the top of that broadening triangle from January. Ideally, we stay on the right side of that 200-day moving average at 1.25 pence in the meantime. But it'd be interesting to see whether we can close above 1.5 pence today. Haven't looked at Simec for a long time, and here we've got a classic turnaround with the breakthrough the 200-day moving average at 1.1 pence. Above that, looking for 1.6 pence by the end of next month. If you're cautious, maybe you want to see a bit more price action above 1.2 pence, which was the old post-September resistance for the shares. The next stock is one which is also rather rare in terms of its appearances here, 10 Lifestyle, but it looks as though we're breaking that line of resistance there from March around 103, and above that looking for the top of the rising trend channel from the beginning of the year as high as £1.25 by the end of next month. A nice bear trap there to start this month, so it's a bear trap reversal, and looking for bear trap gap reversal, and we're looking for plenty of momentum after that particular trap. On to the last few. First one is TMG, otherwise known as the Mission Group, which I don't think I've ever covered before. Here, there's a possibility we're in a rising trend channel base. Neckline resistance broken at 15 pence. Above that, we're looking for 30 pence as soon as the end of next month, backed by these generally very positive candles that we've had over the last 3 weeks or so. So that does suggest that the gap down in October was a bit of an overshoot to the downside. Can't resist looking at Upland, because obviously we're on the edge of our seats to work out whether the shares have actually finally bottomed out. Looks as though so far they have. There's an uptrend line there from back in September around the 2 pence level. The longer we stay above 2 pence, the greater the chance of a break of the main resistance here at 2.8, and then we can try and fill that gap up to 3.8 pence from last month. The 50-day line still rising as well. The only thing missing is the RSI still on the wrong side of neutral 50, so we want to see the RSI back above the 50 level versus 47 pence at the moment. Finishing up with Wildcat, which I've written about quite a lot and also charted quite a lot as well, and it looks like that devotion has paid off. Here we broke neckline resistance around the 0.17 pence level, and our initial target was the 50-day moving average at 0.24, which just happens to be today's intraday high to date. End of day close back above 0.24, and we're looking to fill the gap up to 0.32 by the end of next month, or hopefully even sooner. The key here is to stay above that last October peak at 0.17, or 0.18 actually, to be more accurate on that. That's it from me today. More updates tomorrow.